Greetings, members, one and all of the Salivation Nation. Looks like gold is taking a little bit of a dip now, but let's find out some of the reasons why and why some analysts believe that higher prices will loom ahead here. Copper and palladium futures have also finished a bit higher, according to this article here on Market Watch. This is from Myra P. Sofong. Gold futures posted a second straight session decline on Monday, in part as a leading dollar index gained, though bullish analysts considered the metal's action to only be a pause in its recent uptrend. Higher Chinese demand for gold and silver have been factored in by the markets, said Chintan Karnani, chief market analyst at Insignia Consultants. But Chinese consumer buying will still be closely watched with the Lunar New Year celebration this week, a holiday that boosts gold purchases for gift giving. Gold prices are not dictated by Chinese demand only, Karnani said. Central bank buying and hosts of non-economic factors like developments in Venezuela, Brexit, among others, are supporting gold prices. Karnani said he's bullish on bullion and advises traders to use sharp corrections to invest in gold. April gold fell $2.80 to settle at $13.19.30 an ounce, and we'll explore these prices more in depth here in a moment. Prices based on the most active contracts, however, rose 1.9% last week. The dollar index is up 0.23%. Was up 0.3% Monday, making commodities priced in the greenback less attractive to users in other currencies. And major stock indexes traded higher as gold futures settled. Gold futures tallied a second weekly climb in a row through last Friday after the Federal Reserve hinted at a pause in interest rate hikes. U.S. employment data reinforced a picture of solid labor market, but one that isn't likely to sway the Fed from its newfound patient policy stance. Development that helped to hand gold a solid 3% January gain, its fourth straight monthly advance. Richard Perry, analyst at Hantech Markets, said gold's push north through a key resistance area between $1,300 and $1,310 marked an important technical breakthrough. And I agree with that. I think that that's a new floor. $1,300 at least is a new floor. The pivot now becomes a basis of support as a recovery is now on course for a test of the 2018 highs, around $1,365, he said in a note. And behind that move, there's a seasonal factor to consider, with Chinese Golden Week starting this week, typically increasing physical demand, whilst, according to the World Gold Council, central banks are busy buying gold, increasing their gold reserves by 651 metric tons in 2018, which is the biggest since 1971, Perry said. This year, we are seeing the development of a global cyclical downturn, which is a gold positive. 1971 is quite an interesting year because it was a year that we were taken off the gold standard. And it makes you wonder, since the dollar was taken off the gold standard, we saw a big uptake in gold reserves by central banks that year. Now we have matched that year. And it's the biggest since 1971. That's important. It just goes to show you that other nations are, they're using the dollar, and the dollar is there, and they will take advantage of it. But maybe they're seeing something down the road that most of us in this community already see, but most everybody else doesn't, is that the dollar is not too big to fail. That's right. The Fed has pushed the pause button on its tightening cycle, citing concerns over slowdown in China and the Eurozone, and even Brexit. Now, silver, it fell 4.5 cents or 0.3% to $15.88 an ounce after a gain of 1.5% last week. March copper rose 0.8% to $2.79 a pound. April platinum fell 0.5% to $822 an ounce, and palladium settled at $13.30 an ounce, up 1.3%. The gold-backed SPDR Gold Sharing Exchange Traded Fund (GLD) was down 0.3%, and the iShares Silver Trust edged down 0.2%. The Van Eck Vectors Gold Miners shed 0.6%. So there you have it. It's interesting to see what's going on. And by the way, this lunar week here, how the Chinese demand is just one of a myriad of different factors, but it's a real case of actual physical demand causing some influence on the price to a degree. So looking at the prices of gold, we can see that it is down, and it's measurably down here. But it's fascinating. Silver's below $16, and I thought, with $16, we may have seen a new floor there. But certainly we are in the high 15s there for sure, and it could very easily get back up into that $16 level again. And my feeling is probably this year, I'm going to be a little more tepid this year than I was last year in my predictions, that I think we'll see it at least rise above $16, and that'll be the new floor at the very least. I think that's probably a safe bet to assume for silver. And gold, I think the same thing with its $1,300 floor too. But we'll see what happens with the economic situation. If we get more, quarters of high GDP and low unemployment and job creation and economic stimulus, from the private sector, then we could possibly see the Federal Reserve reverse course on its predictions of a more of a dovish approach to the interest rates in the coming year. And if they decide to raise rates more than what they had originally predicted earlier, that could cause obviously the prices of gold and silver to go down relatively significantly, and it could also put a pause on the economy. And if they were to do that, the economy, I believe, is delicate enough, it could possibly be the beginning of a spiral into a recession. It's a very delicate balancing act at this point. We'll see how it all plays out. Platinum is still struggling here, but it is well above the $800 level. I think that's the new floor for platinum, and I see that being bullish in the coming year here with platinum as it competes with palladium, which is up, to $1370. Wow, we're getting closer to $1,400 an ounce for palladium, which was the number that I was predicting for gold last year. By the end of last year, it didn't happen. So it's going to be quite fascinating to see what happens with these metals. And of course, we know, looking through the going back in time, seeing where things are with the price as it's moved up and down here in the past year. Look at that, $1,200. Now it's over $100 higher than that from just back in November there. Very interesting indeed. Good deals. And, gold, it's the safest of the safe havens. Silver is a safe haven. And it's where we put our money to protect ourselves, and it's something to certainly accumulate and enjoy. Silver and gold, both are the ultimate stores of wealth. I believe in economic uncertainty. It's an insurance policy we hold, and so that's where we lie. That's why we keep on accumulating. And I believe you accumulate no matter what the price is. I know that sounds silly when you think about it on the surface, because, you don't know what's going to happen tomorrow. In 2011, when the price was so high, we were thinking it could go even higher, and when you're in the midst of the crisis, so to speak, or the anomaly, as 2011 was, of course, 1980 was an anomaly too, but I think, by and large, most people kind of recognize that for what it was. It was a little bit more difficult in 2011. But my feeling is you give yourself a budget for each month to spend on precious metals, and whatever you can afford to get with that budget, you get. Don't base it off of ounces, because obviously you need to think about price when purchasing because of your other financial obligations. When you have the ounces in your hand, that is when you don't think about them in terms of price. You think about them in terms of ounces. Because if you look at silver and you've bought it in 2011 and it was $48 an ounce, And here you are sitting with it, that ounce of silver that's way less than half that price. Then you're just you're fretting over a situation that you can't control and you can't really do anything about, and and you won't see that loss until you actually sell it. But you will also be offset that loss from the times when you have purchased silver at a lower price than what it is now. You dollar cost average it all out. It's a long-term game, just like it is with gold. But silver you have to be a little bit more patient with because it's more volatile. But going to be interesting. So we have a recent loss here, but looking for momentum in the coming year here. As the analysts say, that there's going to be corrections looking down the pike, especially with developments around the world. And that's just it. Geopolitical aspects can really play a huge role when it comes to gold and silver prices. Not only politics around the world, but domestic politics as well. So we'll see how it goes. But nonetheless, we hold these metals to be self-evident, and that's what we're going to continue to do. I'd like to extend a multitude of gratitude, y'all, for watching, and encourage you to please rate, comment, and subscribe.